2020.
Oh,
Yeah,
what is
2020.
it?
Live?
Hey
Hey everyone,
Brett
Brett
Sifling
Sifling here.
I'm an investment advisor here at Gilbert Kawasaki.
And
Hey guys, Ben Dunbar, managing partner here at Gilbert Kawasaki.
Let's get the fun stuff over with. We gotta talk disclosures before we talk anything. Anything we talk about today, maybe stocks, maybe investing. Always recommend consulting your financial advisor before making any investment decisions. We may own companies that we talk about, we may not. Anything can change at any time. So do not take anything here today as investment advice. With that, we're here to talk about the volatile market.
Yeah.
So how about it, Brett?
Totally, yeah. We've got a lot of questions from clients and friends, and so we figured we'd just hop on here and go over a few of them and, what the heck is going on.
Yeah, well, obviously we're talking coronavirus. The Dow is down over 1,000 points. I think that's only happened 3 or 4 times in history. But we hate the Dow and we hate talking points. You should always be looking at the S&P 500. And the market's down over 3%. It looked like it was accelerating here coming at the end, but that's happened a few hundred times. So no reason to overreact during these times. It does happen. Don't let the point scare you. So.
And the reason we look at something like the S&P 500 instead of the Dow is it's just a much larger representation of the actual markets. The Dow is kind of the old school thinking in that way.
Yeah. It's only 30 companies or 500 versus 500 for the S&P 500.
Yeah. So, coronavirus.
Yeah. So people are so scared of the coronavirus.
So scared.
Yeah, that 38% of regular beer drinkers now refuse to drink Corona. This is a true statistic. So I think that was some pretty crappy timing for the Corona hard seltzer to come out. So I'm sticking with White Claw. I don't know about you.
Absolutely. And yeah, we've been aware of this for the past few months. It's been something that's on our radar. We were, luckily enough, we had some good timing with rebalancing a lot of our client accounts before this correction started. Corrections are not normal, or they are normal, sorry, in markets. They tend to happen at 10% correction at least once to twice a year.
Yep.
For the most part.
And this one was actually the fastest one in history. So we saw the market correct over 10% in just 5 quick days. So it's been a tough ride, and a lot of us, we're millennials, we're young. For a lot of people, a lot of our friends, they've really never seen the market behave like it has recently, and haven't really dealt with much volatility. So it's a good learning experience.
Yeah. So should you be worried about all this stuff if you are a young investor, Ben?
So if you're trying to invest for the next couple of weeks, like a lot of those Wall Street bets that we follow very closely, if you are trying to bet, then yes, you should be worried. The coronavirus is definitely affecting human behavior. You can't deny it. I mean, I'm going to a concert tonight. I already know people that are making decisions to not go to concerts. Everyone in LA is freaking out that Coachella might get canceled.
You mean Stagecoach?
No one really cares about Stagecoach at all whatsoever. But yeah, there's definitely over the short term there's some worry, but if you start to break down into the numbers of coronavirus, we're hearing about how contagious it is. We're hearing about obviously, unfortunately, deaths from coronavirus, but we want to take a little bit of time today just to talk perspective of looking at the flu, looking at historical numbers and all that type of stuff, just to give you an idea of really how bad it is.
Yeah, so there's about 100,000 confirmed cases as of right now. But the number is likely way higher, and we think that that's mostly due to the lack of testing kits. So right now the testing kits are only being produced by the CDC, and there's actually trying to get as many out there as possible, but it's not a very simple process. So if you actually read online, there's more of the death tolls around 3,300.
Yeah,
I believe,
3%,
give or take. But a lot of the actual deaths are happening with the older population.
Yep.
Right. So it's very. I think it was like 0.6% of cases actually have been happening if you're under age 40.
Yeah, basically, if you're under age 40, I mean, it's 6 out of 1,000 people, but that's reported cases. So here's the thing, like, you have tens of thousands likely people carrying coronavirus right now. Hate to scare you guys, but that's just the case. We don't know they have it, and maybe they are trying to get tested. I had a good friend that came back from Brazil. He felt really sick, and he tried to get tested, and he actually couldn't get access to tests. And so basically we're walking around with a lot of undocumented cases. And so when you look at, you hear this, 3% of people have died that have gotten coronavirus. In reality, there's way more people that have it that we just don't know. And
that number is kind of skewed too because we didn't really know that this was an outbreak in Wuhan until it was pretty much already too late.
Yep.
So the actual number is probably closer to the flu, which is like 2% or less than that.
Yeah, it's less than 1 actually. So but look, you can't deny that consumer behavior is changing, right? People are the travel industry has just gotten absolutely whacked, and I don't know, my buddy and I, we were starting to look at flights later in the year, and so look, if you're looking to travel, probably now's not a bad time to book a flight. But no, it's these airline stocks are a little bit scary. These hotel stocks are a little bit scary, and
cruise liners.
Yeah, especially that. Yeah, I think they have to pay you to get on a cruise line.
There's no way I'm getting quarantined with thousands of people on a boat.
And then you're gonna get you're gonna get caught anyways. You're gonna get the coronavirus anyways.
Yeah.
So it's pretty funny, or not really funny. But look, so consumer behavior is affected, so we can't deny that. So people are going to malls less. Retail is already in such a horrendous space, and so we feel bad for retail, but companies like Amazon, companies like Microsoft, companies that we like and we
Netflix.
don't. Yeah, it's consumer behavior is not really changing for those companies. So although we expect a lot of volatility and consumer may spend a little bit less, stuff that they're still buying at home, stuff that they're still doing at home, video game companies, that type of stuff, that's not necessarily changing. And should you going back to the question that you asked, like, should you be worried? You shouldn't be trading your retirement accounts during this time, because if you miss one of these big up days, yes, the market's down, but yesterday we had a big up day, and if you sold the day before that, when you try to time the market during these times, it's really challenging. So really the easiest way, which is what we're telling our clients and what we're talking about, is, hey, you want to be saving on a regular basis.
Totally.
You want to be investing on a regular basis. And when we look back 2-3 years from now, we think this will just be a minor blip in the grand scheme of things.
Yeah. And it's going to take at least a couple quarters to work through, because we're going to continue to see volatility. We're going to continue to see companies that are greatly affected in their supply chains and companies that really aren't. But ultimately, what does that mean for you and your longer term investments is that you want to be saving and you want to be investing maybe even a little bit extra during these turbulent times and take advantage of this fluctuating market. A lot of our clients aren't actually touching their retirement funds for the next 30 years.
Yep.
So if you can, imagine picking up a few good positions here and growing that over the next 30 years, it could be a great opportunity, especially in an economy that is proven to be very, very resilient.
For sure. Brett, you can't even touch your retirement account in 30 years.
I
don't even think you hit the qualification for that. I just barely made it. So yeah, we're obviously continuing to monitor this closely. This is going to be in our face in the news for the next few months, most likely. So obviously don't try to time the market. Don't be making big bets here within the next couple months. Obviously we're here if you have any questions. Great part about our firm is because we have young advisors, we work with a lot of young people and we get to grow with you. So, and also if there's anything else you want to hear about, let us know. I think we're going to start doing this weekly. And so we're happy to talk through whatever you want.
Yeah, totally. Make sure you guys subscribe, follow us on Twitter. We put out a lot of content on there. At Sifling Trades, and it was at Ben Dunbar,
GK. Yeah.
And yeah, hopefully we'll see you guys on the next stream. Thanks for tuning in.
Thanks.